All right. Well, Mark, I'm pleased to be joined by Mark Kulda, Vice President of Public Affairs for the Insurance Federation of Minnesota, a nonprofit state insurance trade association representing about 50 insurance companies and other related organizations. Mark, thank you for joining us today.
Sure. Thanks a lot for having me, Brian. I appreciate the opportunity.
Absolutely. Well, I wonder if you could start by just maybe for those who aren't familiar with you or the Insurance Federation, just start out by talking a little bit about your mission, how long you've been around, and who some of your members are.
Sure. So the Insurance Federation of Minnesota is, as you mentioned, it's a nonprofit state insurance trade association, and there's, every state has one. We're basically these are organizations that are member organizations, and so insurance companies become the members of the IFM. And then our mission is to basically advocate on behalf of not only the member companies, but also the consumers. So many times what we do is we advocate for good legislation, good policies that are pro-consumer so that the insurance buyers are well served. And so that's basically our mission. We work mostly at the Minnesota legislature and also in front of a few regulators, most notably the Minnesota Department of Commerce. Now, the Insurance Federation of Minnesota has been around since 1914, so we've been here over 106 years now, advocating on behalf of insurance companies and their policyholders. We have for a long time, but we're headquartered in downtown St. Paul. We're currently in Bloomington, but we do represent about 50 insurance companies that sell what we call property casualty insurance. So we represent companies that sell things like homeowners insurance, auto insurance, professional liability insurance, commercial insurance, surety bonds, things like that. We do not represent companies that sell health insurance or life insurance, but we do represent property casualty companies in Minnesota. We have done that for the last 106 years. My position is as Vice President of Public Affairs, so I work on media relations and also engage in some lobbying activities at the Capitol.
Okay. And how long have you been with the Federation?
I started first in 1999, and then I left briefly for about 2 years, and then I came back and been there since then. So it's, in the last 21 years, I've been there 19 of the last 21 years, so quite a long time.
Nice run. So obviously, just to jump right into, I guess, the A topic, a lot of people have been talking about the civil unrest after the death of George Floyd and the number of businesses that suffered damage from the looting and rioting and so forth. Mm-hmm. And there have been some talk in the press about maybe some frustration about how the claims are being paid out or the timeliness of that, and maybe some people waiting longer than they would like. How would you respond to that? And what are, I guess, can you walk us through some of the complexities of that situation?
Sure. Well, I think the first thing to realize is that these losses due to looting, vandalism, rioting, these are specifically spelled out as covered in almost every commercial insurance policy. So the term is rioting, looting, and civil commotion. Those words are actually written in the standard commercial insurance policy. They've been in those policies for many years. And so in almost every case, these losses that are being presented as claims are going to be payable under the terms of the insurance policy. So then it kind of asks the question is, did the policyholders have the right kind of coverage, and did they have enough coverage? And I think when you listen to the business owners in Minneapolis and St. Paul, some of them were a little bit confused as to what their insurance policies contained. And so we find that many of the concerns that are being raised are by policyholders who either didn't understand their coverage, or in many cases, sadly, we're finding that these business owners actually deliberately either didn't buy the coverage they needed. So for example, they might have only bought a policy that covered liability in case they get sued, but no property coverage at all. Or they may have bought a policy with a limit that they knew was too low to replace the contents in the building and business interruption claims, et cetera. And they did that deliberately because they didn't want to pay the premium for full coverage. So what we know is that, our member companies have gotten many claims, hundreds and hundreds of claims, upwards of 1,000. They are in the process of paying these claims. And we are hearing from people that there are concerns about insurance coverage in that area. But as I explained, mostly it's because the business owners either didn't have right coverage or enough of it. We did get asked by the Minnesota Department of Commerce to provide them with some data on the number of claims, the amount of claims payments that we've made already, and how much we expect to pay. And the department has used a percentage to kind of roughly estimate how many claims have been paid. And we wanted to let them know that that's probably not a very good accurate depiction on what's actually happening in that area. And so we did have a meeting several weeks ago with that then Commerce Commissioner Steve Kelly and some of his staff, just walk through the process, how it happens, what you do when you file a claim, especially in these aren't run-of-the-mill auto and homeowners claims where it's pretty easy to adjust the dollar amount and make the payment and get the work done right away. These are complex commercial claims, and they take a lot of time to get resolved. So when we hear that, well, you may not be paying claims fast enough because look at the percentage, it's such a small percentage of the amount that you expect to pay that you paid so far. Why is that? And the answer really is that it takes a long time to determine what the proper dollar amount is on a complex commercial claim. And then many times the property owner, the policyholder, the claimant, they have to decide what they want to do. In many cases, they have to make the decision, do they want to rebuild in the same place or not? And if they don't want to rebuild in the same place and they want to go somewhere else, I think the claim probably gets resolved more quickly. If they decide that they want to rebuild in the same place, then it takes a lot more time just because you have to do demolition, you have to have permits pulled. You know, if you're rebuilding from scratch, basically, it's going to be a long process. And the insurance claims process, in a commercial claim, there's not usually just one payment. Oftentimes that payment is kind of broken up into pieces, and the final piece doesn't get paid until the building is finally done. And so these claims, these could drag out for a while. So when you see a low percentage of claims paid so far, that doesn't mean that insurers are necessarily dragging their feet. That just shows you that these claims are complex and it's going to take time to resolve. And we should know that, you know, as time goes on and more work gets completed, more rebuilding is done, more payment will be made, and eventually people will be made whole.
Okay. Well, what are the latest numbers or estimates that you can share with us in terms of the total losses and the percentage of claims paid out so far?
Well, so the Commerce Department, as I mentioned, is doing a data call. So they're collecting this information from insurers. Initially, they were doing it in 2-week bursts, and they've since switched now to 1-month bursts. So our data is just a little bit dated now because we're still waiting for the next data call time to hit. But we know that our member companies are estimating that they'll be paying about $280 million in insured losses. We're getting close to about 40% of that amount being paid out. But one thing to note is that's just insured losses. When you're talking about, you know, how much damage happened overall, you have to realize that it's going to be in 3 pieces. The first piece is the 280 million or so in insured losses. Well, then there's going to be a significant amount of uninsured losses. So that's a loss that somebody didn't have insurance for or the wrong kind of insurance. And we really don't know. There's no easy way to tell what that number is going to be. And then there'll be losses to public infrastructure. So for example, you know, the city of Minneapolis owned the 3rd Precinct building. There was a Hennepin County Library building that was burned down. There was a charter school that was burned. There was several 2 post offices. So there's federal property that was damaged. And so when you look at the publicly owned infrastructure, we don't know what that estimate is going to be either. But just from insured losses, it's going to be about 280 million. When you add in uninsured and public property loss, this could easily be a $500 million catastrophe loss.
What are some examples of maybe losses that aren't covered in a typical standard policy?
Sure. So let's just say a property owner may have only purchased what we call CGL, Commercial General Liability Insurance. And so that's a policy that protects the business owner in case perhaps, for example, a customer comes onto their premises and then maybe they slip and fall and they injure themselves. This is very common, actually. They have a slip and fall accident and they get injured and they sue the business owner. The Commercial General Liability, or CGL policy, would pay in that case. And we do know there are cases where there are business owners who that's the only thing they bought was a CGL policy. Well, that did protect them in case they get sued, but it didn't cover any property loss whatsoever. So if they had loss to their building, loss to their contents, if they suffered the lack of ability to earn income, which that is called business interruption, there is, the possibility of getting money from your business interruption coverage. Those kind of claims are not covered. If you just had a CGL policy, then you'd only be able to get payment on a claim if someone sued you. We also know that people did buy policies with low limits on what could be paid on the property loss. So if you had a building that perhaps was valued at, let's say, $500,000, we knew property owners didn't buy the full $500,000, and that's on the property owner. They have the right to do that if they want to, but it's not necessarily prudent business practice to deliberately underinsure yourselves. And what happened is exactly why. It's important that if you have a business and you do want to protect that business, there's insurance coverage available that's not terribly expensive, that can protect you. And unfortunately, it's a sad lesson that we have to learn, but I think a lot of business owners will start to reassess if they deliberately didn't buy the right insurance or deliberately bought too little of it. We have heard one or two times that there's some business owners who didn't really understand the insurance buying process. And, particularly on Lake Street, there's a lot of people from other countries. Maybe they didn't quite understand how the system works here. There's certainly some education that could be done. And I think we fault our industry and the agent community for not doing a better job of explaining what is insurance, how much do you need, how can you get it. But it's really simple. When you want to find that kind of coverage, you can just contact an agent or a broker, and it doesn't take much time. You give them some very minimal details of what you're looking for and let them do the work and find the coverage and give you the options, and they'll do all the legwork and give you the presentation. So, we've heard concerns from business owners saying, well, it's too hard to learn how to do it. I don't want to do that. And our answer is, well, there's a great resource, and that's called the agent. So you give the agent or a broker a call, and they can do all the work for you. So there's really no excuse for a business owner not to be prepared to be able to handle a catastrophe like this, because there are coverage options available and easily affordable, easily available, and not too difficult to understand when you contact an agent.
Yeah, I talked to a business owner on University Avenue in St. Paul who unfortunately lost, she suffered major damage to the building, which she owned, and inventory and personal property. And if you add it all up, she said it was close to $1 million. And could all of those things potentially have been covered in an insurance policy?
Absolutely. A comprehensive commercial insurance policy easily could cover all that. Commercial insurance is much different from what we call personal lines. Personal lines like homeowners and auto, they're kind of cookie cutters. So the underwriting done on it is pretty simple underwriting. You kind of slot yourself into where you fit, and they can price you the policy, right, even on the line. Heck, you can even do it on your phone. You can go on your phone, type in some details, and you can buy coverage on your phone while you're waiting minutes after you enter the data. So it's very easy to get that kind of coverage in personal lines. Commercial lines is a much different animal, because each one of those policies, and I mean every single policy, is individually underwritten by the insurer. So they can actually go through the business owner and say, okay, what do you need to cover? Okay, you need to cover your building. How much is it worth? What would the rebuilding cost be? And so you can put that as a piece. What kind of inventory do you have? Okay, so let's add that up and figure out, okay, here's that. Personal property, loss of income. If you suffer a situation where you're not able to be in business because of a covered loss, then you can actually get an insurance claim on the lack of income that you would be making had you not been closed because your property was damaged. So there's all those lines of coverage can be put into a package, and then that you can come up with a final premium. And those kind of packages are individually tailored to each business. So the business owner that you talked to could have very easily spoken with an insurer and actually covered all those to an amount that would completely replace all of the business, the building, the contents, the potential loss of business income. If you had temporary relocation expenses, so if she wanted to open her business at a different storefront temporarily while they were making repairs to her main location, some of those temporary expenses can be covered by insurance as well. All of which can be put into a package. And we hope that business owners learn from this, that it's really important to have that conversation with your agent or broker and let them do the work to find you the coverage that you need, because it is easily obtainable.
And I assume the same thing applies to buildings under construction. We've reported on at least a couple of instances where buildings under construction nearing completion were destroyed or damaged.
Yes.
So is that,
Yes, same thing applies there with a couple of caveats. One is that I'm not sure that you'd be able to be fully insured if the building wasn't completed yet. I know there were several there's several properties that were, there was one right across from the XL Energy Center, for example, that I think caught fire.
yeah.
There were some there was a big building in Minneapolis near Lake Street that was nearing completion. Uh, those might have slightly different coverages because when the building's not complete yet, it's not for sure whether the fire suppression systems that are required under the building codes were operational yet. And if they weren't, it was a higher risk. And if it was a higher risk, there may either be lower coverage amounts or a higher deductible, and the full policy may not kick in until the building was certified for occupancy, just because we don't know if all the risk mitigation that as in the codes were completed at that time. So that's one thing to think about in those kind of situations.
So the one big takeaway here is business owners are well advised to seek out an agent and talk and get some answers to if they aren't sure what kind of coverage they should get. Just
Right.
seek someone
Well,
out.
I don't think anybody in the insurance industry anticipates that everybody that's not in the insurance industry understands what's available. But there are many times where business owners simply don't know what they could have. And that's where an agent who could say, hey, you might want to think about this kind of coverage. Maybe there's a business that does have a significant public presence that has a lot of people coming in to the facility. You may want to, as a business owner, think about getting a really serious commercial general liability policy, maybe with an umbrella on top of that, so that if you do get sued, because we call them nuclear verdicts. We see cases where juries are awarding astronomical amounts of money that aren't really warranted, but meant to send a message to the business owner that you shouldn't do that. And so you have these large jury verdict awards, these nuclear verdicts, which need to be paid for somehow. And so it might not be bad for a business owner to consider that, and an agent or a broker can say, you have a lot more risk than you think you do, and explain how that can be. And in doing that, find risk mitigation tools. That's one thing that brokers will do for free, really, for a client, is they'll look at your business operations and they'll say, look, you have a lot of risk in these areas, and here are some mitigation strategies. Here's additional training you can give to your employees. Here's additional equipment that you can buy, like the safety equipment that can help prevent losses. Here's some different things you can do with your premises to make sure that your customers are safe. They give you those tools and those ideas for free when you are a client of theirs, and that can help you actually lower your premium, because if you can show to the insurer that you're actively taking steps to reduce the potential loss, then the premium will actually go down, because these commercial insurance policies are individually underwritten and priced based on the risk. So if you can go through that process with a broker or an agent, you actually can reduce your risk and lower your premiums while still protecting your assets. And I think it's a great tool to use.
Yeah, interesting stuff. And what other initiatives has the Federation been working on, either at the Capitol or just in general? Anything else on your plate?
Well, one of the things that's been happening this year, because not only did we have all the civil commotion, but we've also had a pretty bad stormy year for Minnesota. Ever since 1998, we've noticed a very dramatic and very specific increase in the amount of severe storms that have hit our state. Back in 1998, we had a series of 3 really significant storms where there was about $1.5 billion in catastrophe losses in 1998. And that was more than the previous 40 years combined. So we went for decades with relative quiet, and all of a sudden in 1998, we had a $1.5 billion catastrophe year. And since then, we have, every few years, we have another $1 billion event. So we just had another one 2 years ago that we thought was only going to be about $1 billion. It ended up being $3.2 billion. The biggest, it was one hailstorm in July a few years ago that hit the northwest metro of the Twin Cities, and that ended up being the 10th most costly storm in the world that year. And so that was, and if you look back, 40 years, we didn't even have $1.5 billion in losses. We had more than double that in one 30-minute storm. So you can see that these weather events are having a significant impact. And the biggest issue with that is that it's being reflected in insurance premiums. So back in 1998, the average homeowner's insurance premium was about $350. We were like 35th in the country, so we were a relatively affordable state. You fast forward to today, and we've had multiple years of billion-dollar events. Our average premium is close to $1,500. We're now number 10 in the country in just the past 20, 30 years or so. And really, it's because of the increased storm severity. And we're also seeing when these storms happen, we see a flood of what we call storm chasers. So these are the roofing companies. Most of them are from out of town. They come in and offer to do your roof. They make all kinds of promises. They put the roof on. The bid for the price of the roof is about triple what you'd see from your local hometown roofer. And then the roof goes on, the payment's made, and then they're out of town. So if something happens, the phone number that they had was a throwaway cell phone. So you try to contact them, and who knows where they are. And so consumers aren't really served by that. We're trying to fight back against that kind of stuff. We just had a meeting actually yesterday with the Department of Labor and Industry to talk about what some of the things that we can do, if there's any tools we can use to help maybe, inform consumers or find ways we can kind of cut down on the storm chasers. And so those are the kind of initiatives that we might be looking at in the 2021 legislative session.
Yeah, and consumers make sure those contractors are licensed and bonded and in good standing. And insured. Absolutely.
It's important to make sure the licensed, bonded, and insured, because many of these roofing companies will hire subcontractors. And if a subcontractor is up on your roof and the contractor didn't have, for example, workers' compensation insurance for them, and the subcontractor doesn't carry it on themselves, and then they fall off your roof and get hurt, guess who's paying for that? You, the homeowner, could get sued and have to have a mechanic's lien on your mortgage to pay off the medical costs of the subcontractor because the contractor didn't have the right insurance for them. So it's important that if you're going to have someone work on your house, double check the references, make sure they have the license, make sure they're bonded, make sure they're insured. That way you as the homeowner can be protected in case something bad happens.
Well, and these fly-by-night characters undermine the legitimate contractors out there who are playing by
totally. And we always recommend that. We recommend, make sure you go with somebody that you've heard about. If you, get a recommendation from a neighbor or a friend or relative or even your insurance agent, if the company's here in Minnesota and they hire their own staff, they have their own vehicles and they've got their own capital invested in it, that's a company that's going to be here for a while. If you're working with somebody who is working off a cell phone in the back of a pickup truck with no signs on it, that's pretty risky because you don't know where they're going to be when they're done with your job. So if you have a problem with it, that could be an issue if, you need to kind of make another repair. If you had a hometown company do it, you know where they are. You don't necessarily know where a guy in a pickup truck and a cell phone is. So it's really important to make sure that you pick the right contractor, and hopefully you'll have a good experience.
Yeah. Well, Mark, thank you. That's a lot of great information there. Any other final thoughts before I let you go?
No, just, the important thing is, and we at the Insurance Federation, insurance industry, we are trying to get the word out through forums like this and other forums to just let consumers know that if you have questions about insurance, you certainly can ask your company. At the Insurance Federation, if you go to insurancefederation.org, our website, we do have a tool available. If you have a question about insurance, it's called the Minnesota Insurance Helpline. And if you go on insurancefederation.org, you click on the helpline link, you can ask your question, and then usually within a day or two, we can have someone get back to you with answers to your insurance questions, free, unbiased. We don't recommend companies. We just make sure that we answer consumer questions. And we are trying to get the word out that, we know insurance is a complicated topic, but with time, and all you have to do is just contact us, and we can certainly answer any questions that they have.
Great. Well, thank you again, Mark. I really enjoyed chatting with you and appreciate the information. And
thanks, Brian. Really appreciate being there. I appreciate the opportunity to be here. Take care.
Thank you. Take care.